Hi there, and thank you for tuning in today. This is Victoria from crushcrypto.com, and in this video, I'll be covering Kyber Network and its upcoming ICO on September 15th. Kyber is one of the most anticipated ICOs of the year. Their Slack channel has over 33,000 users and actually set a record for being the largest public Slack in the world. As of this morning, they had over 40,000 people on their whitelist. Vitalik, the founder and chief scientist of Ethereum, has been an official advisor for only 2 ICOs, and this is one of them. A quick disclaimer before I start, we do not receive payments for any of our reviews. This is just our personal opinion and analysis and not investment advice. Kyber Network is a new decentralized exchange that allows for instant trading and conversion of cryptocurrency. It has 4 key properties. It's trustless as all transactions are done via smart contracts and no funds are held on the exchange. It's instantaneous as there is no waiting time for confirmations and no deposits will be required. This means that users can get their tokens as soon as the transaction is put on the blockchain. It is highly liquid because they will keep a reserve of various tokens and cryptocurrencies, and users will know the conversion rate before a transaction is processed. The Kyber network has 4 primary uses. First, users can convert and exchange tokens securely and instantly. Second, users can pay anyone in any token with their own tokens. Kyber helps perform the conversion and forwards the payments. Third, users can hedge against price fluctuations by engaging in derivatives like forwards and options. And lastly, users can make cross-chain payments. For example, they can receive payments in Bitcoin and other cryptocurrencies in Ether. Let me show you now how Kyber Network is structured and what the key roles are. First, you have Kyber Network and users like you and I who can do the 4 things that I mentioned in my previous slide. In order for us to do that, Kyber needs to maintain a reserve that contains different tokens and cryptocurrencies. Kyber will have some of its own reserve, but external reserve contributors will help provide that additional capital to ensure there's enough of each token and cryptocurrency in the reserve. The reserve managers help maintain the reserve and they determine the exchange rates for the different transactions. Initially, Kyber will be the sole reserve manager, but over time, anyone can become a manager, help provide liquidity, and earn income from that role. And their profit is shared with the reserve contributors. And finally, the Kyber network operators are responsible for adding and removing reserve entities, listing and delisting tokens, and so on. Eventually, the proper decentralized governance system will be set up to take over these tasks. About a month ago, Kyber released an early version of their Kyber wallet platform. Let me show you a demo of how you would exchange tokens on their platform. You can also try the demo out yourself online through their website. So this is what the interface looks like right now. This is your Ether address, and you can see you currently have a balance of 3 Ether. You don't have any Golem tokens at the moment, and let's say you want to exchange some Ether to Golem. You simply click on the exchange button to start the process. A screen pops up and you can enter the amount of Ether you want to exchange. When we put in 1 Ether, the corresponding amount of Golem shows up automatically. You then click Next, enter a password, and submit the transaction. The transaction is done, and you can see you've now got around 820 Golem tokens. And you can see your Ether balance went from 3 to just under 2. It's slightly under 2 to account for the cost of gas used in that transaction. Let me show you another demo of the Kyber wallet, where you can send tokens from one wallet to another wallet. Let's say you've got a balance of around 0.67 Golem, and you have an Ether balance of just under 2. Suppose you want to send some Golem to another wallet and accept it in Ether. You simply click on the Send button to start the process. A screen will pop up asking you to select the recipient address. Once you've selected the right Ether address, you click on Next. You can choose to send and receive in various tokens. For this transaction, we are going to send 0.6 Golem and receive an Ether. Again, the conversion will be done for you automatically. After that, you click on Next. You'll be asked to enter a password, and then you can submit the transaction. You can see that your Golem balance has now dropped to 0.07, and your second Ether address now has a small Ether balance. Overall, I found the Kyber wallet to be pretty easy to use. The interface is quite clean, and it's pretty user-friendly. Here's a screenshot of the dashboard for the reserve managers. The manager can see the various tokens in the reserve portfolio and various information such as the token, wallet address, current, and target quantities. They can also see all the rates a token has with all the other asset types. These blue bars here are basically a visual representation of the current quantity of that token versus the target quantity. If it's not at 100%, the manager can easily rebalance it as the dashboard is integrated with Kyber wallets. Let me quickly go over their development roadmap. Last month, they released their MVP on testnet, which includes the user web wallet and the reserve dashboard that I just showed you in my demos. MVP stands for Minimum Viable Product, and basically means the product now has enough features to satisfy early adopters. Next year, they will launch the first mainnet and allow for features like trading arbitrary token pairs. And in 2019, they will be able to support cross-chain payments. Their plan is initially to support the popular tokens like Omesa Go, Golem, and a few others. When cross-chain protocols become more established, they plan to tokenize other cryptocurrencies like Bitcoin and Zcash. Kyber Network will be launching their ICO on September 15th and will issue tokens under the ticker KNC. They are planning to raise 200,000 Ether from their token sale. Around half of that amount has already been raised from a private round. The conversion rate is 1 Ether for 600 KNC tokens, and the total token supply will be 226 million. If they hit their hard cap, they could have a market cap of $102 million, assuming an Ether price of 310. The tokens will become tradable 1 week after the token sale. This chart here shows how the tokens will be allocated. The tokens for the founders and advisors are 15% of the total tokens and will be vested for 2 years. And this chart shows how the proceeds will be used. As you can see, 15% of the proceeds from the token sale, or 100,000 Ether, is for the reserve. They need this large initial capital to guarantee liquidity of the platform before the participation of third-party reserves. For more information on their ICO, please visit their official website. There are 2 primary uses for the KNC tokens. First, the tokens are used as a platform currency. Before operating, the reserve managers will need to pre-purchase these tokens and then use them to pay for the platform fees. The tokens are also used to reward various parties or partners who will be helping them drive traffic and generate volumes on the platform. Basically, it's an incentive for them to help scale the platform. The demand for KNC tokens should gradually increase over time. This is because the collected tokens from the fees will be burned. This means that as adoption of the platform increases, the demand for the token should also increase. And the token value could appreciate even if the project itself does not appreciate in value, because the number of tokens in circulation will decrease over time. The more volume and profit the network generates, the more valuable the KNC tokens will become. So who are the people behind Kyber Network? The team is currently comprised of 7 members. The 3 co-founders previously worked together at SmartPool, an open-source project for the decentralization of mining pools in existing cryptocurrency. Kyber Network is also backed by a very strong group of advisors, including Vitalik, the founder and chief scientist of Ethereum. He was also their advisor back at SmartPool. Kyber and 0x are both high-profile ICOs that tackle similar problems, and we've been getting dozens of requests to compare the two. First, let me go over the areas where we think Kyber is better. With Kyber, users can always find a counterparty to settle their trades, so they don't need to worry about not being able to trade their cryptocurrency, no matter how illiquid it is. Once users enter into a trade, they can receive their tokens instantly. With the 0x protocol, unless you're the taker of that trade, you don't know how long it'll take for another party to take your order. Kyber lets you pay a merchant with any token, and that merchant can accept in any cryptocurrency. This essentially eliminates the need for you to convert your tokens to a more popular cryptocurrency before paying that merchant. If Kyber is implemented successfully, it could potentially create a better product than 0x because of the features that I just mentioned. Let me go over the areas where we think the 0x protocol may be better. First of all, Kyber is an exchange, while 0x is a protocol where other dApps can use it as a component. In our view, protocols are more valuable because different projects can be built on top of it. 0x has a first-mover advantage because there are many dApps and relayers using the 0x protocol. This includes Ethernex, Augur, District 0x, Status, and so on. And finally, because both Kyber and the reserve operators need to make money, Kyber's fees are probably going to be higher than existing exchanges. So which one is better? At the end of the day, we believe it will come down to the fees that Kyber will charge. If Kyber can match or get close to the fee level that 0x relayers charge, then Kyber is better because of its guaranteed liquidity and instant exchange features. But if Kyber's fees are much higher, then 0x will be better for most users. I've included this table in my presentation just for reference. Basically, it compares Kyber with various centralized and decentralized exchanges. Some of this information is extracted from Kyber's white paper, so please check it out for more info. Let's talk about the opportunities now. The project's idea is great, and if successful, it could help push cryptocurrency as a whole forward. Just imagine how cool it'll be to make instant trades on a decentralized exchange. The project has a strong team who worked together before in another blockchain venture called SmartPool prior to Kyber. The KNC token allows token holders to share in the profits made by Kyber via token buyback. Because of this, we believe their tokens have better value proposition than most other ICOs. Kyber is one of the 2 projects that Vitalik is an official advisor of, with the other being Omesa Go. They were one of the most successful ICOs this year, and it became the most valuable token after trading for just 2 months. It generated an impressive 37 times return compared to Ether over the same period. Kyber is also backed by some prominent VCs in the blockchain space. And finally, they've been getting a lot of attention, and it's one of the most anticipated ICOs of the year. Its Slack channel is the largest in the world with over 33,000 members and actually hit Slack's limits. As of this morning, there are over 40,000 whitelisted participants for their ICO. These are some of our concerns. First of all, the reserve system is going to be pretty capital intensive. Guaranteeing liquidity for every token out there requires reserve managers to hold a non-trivial amount of random, illiquid tokens, and it can tie up a lot of capital. They'll need to provide sufficient incentive for people to become reserve managers, especially for less popular tokens. Their final stage, cross-chain trading, is currently slated for release in 2019, but this relies on leveraging future platforms like Polkadot and Cosmos. This means that it will take a while for cross-chain payments to become available, as Polkadot and Cosmos will not be usable anytime soon. Kyber is slower than 0x in terms of development so far. If relayers built on the 0x protocol become successful and scale up, their users may not want to switch to Kyber. Overall, we like this ICO both from a market need perspective and from an investment perspective. As I mentioned earlier, if this project is successful, it could help drive the crypto market forward in a good way. For investing, we're positive on flipping, as Kyber is one of the most anticipated ICOs of the year. As of this morning, there are over 40,000 whitelisted participants. There are many people who wanted to but couldn't get into their whitelist, and for those that did get in, they might not be able to invest as much as they wanted to. This leaves a lot of unmet demand, which could help prop up the token price once it starts trading. We are also positive on long-term holding. Kyber has a great concept with a good chance to succeed in an undersaturated cryptocurrency trading market. Thank you very much for watching this video, and I hope you found it useful. Please check out our website for a full report on Kyber Network, and if you haven't already, please subscribe to our YouTube channel for more on cryptocurrency investing. If you have been whitelisted to participate in Kyber, please remember not to send Ether to any address for their token sale before September 15th, and verify all information on public channels. Given the scale and popularity of this ICO, there are bound to be a lot of phishing scams. See you next time, and let's keep crushing crypto together.